Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, we are live with a good friend of mine, multi-year friend. We got Matt Ober here. I would consider Matt as one of like the New York City fintech OGs. You know, I met Matt. I don't know, Matt, if you knew this, but I worked with Akarsh back in the day. You know, and I think he introduced us, and we got coffee. I think back in like 2012, and I think we had a conversation just talking about fintech or something like that, and then we went our separate ways. We ended up building other things. But you know, when I think about like New York City OG fintech, like back in the day, you know, 2013, 2014, you know, Matt was one of those people that was building, investing, scaling in fintech. I'm just going to do a quick intro and then we'll go through it, right? But you know, Matt is currently a managing partner at Social Leverage. You know, as many of you know, we have a fund accelerator. Matt, when he was at Social Leverage, he was also a mentor. He came back and, you know, mentored some of the fund managers that were in our program. And then he also went through our program and, you know, obviously shared a lot of wisdom, you know, kind of in terms of firm building, you know, asset allocation. And now it's just like, how do you merge that with data science, financial markets, and alternative investment technology? And, you know, before joining Social Leverage, he was the chief data scientist at Third Point, a leading hedge fund with over 20 billion in assets under management. Then he led the development and implementation of data and analytics strategies across the firm, enhancing investment performance, risk management, operational efficiency. And then before Third Point, he led data strategy at WorldQuant. We have a bunch of buddies that are at WorldQuant as well. So it's a small world, but WorldQuant is pretty well-known quant hedge fund, global quantitative asset management firm. He oversaw the sourcing, processing, and analysis of large-scale alternative data sets. I know WorldQuant now has, you know, a venture studio. They're doing just a lot of really crazy stuff to help founders as well. And I think it's all coming from Igor, right? I mean, essentially his mind just thinking through how he can continue to innovate. And then he was part of the founding team of WorldQuant Ventures, where they've invested in both early stage fintech, data technology, and then before that worked at Bloomberg. I worked for one of Bloomberg's competitors, so I know the market quite well. I mean, I'm a little behind now, not being an employee at one of those firms, but also he co-authored a book on practical option strategies, and he regularly writes on his newsletter. Check out mattober.co. Hopefully I did a good job, Matt, on the intro.
You crushed it better than I could do it myself.
Well, that's why I'm here, man. But why don't we hear in your own words? You know, it's a very sexy bio that you have, but let's learn a little more about who Matt is. Who, you know, where did you start out? What did your parents do? Where did you go to school? What did you think you wanted to do? And just kind of let's unpack all of that.
Yeah. You know, early days, my dad was a, you know, computer programmer, but he had his own consulting business. So always grew up with him, you know, working from home, building his own business, you know, worked mornings, nights, you know, was very flexible with his job, but he was always working. And we had a bunch of side businesses as well, right? We owned a candy machine business. We owned a printing time card business. So he had a lot of side hustles, which I feel like is kind of my nature as well, is to always have like something on the side. And my mom didn't work at the beginning, and then she became like a buyer for one of the largest medical companies in the world called Fresenius, like kidney dialysis machines. So maybe that's my negotiation background when I was in the data strategy world dealing with vendors. That was her job.
Yeah.
So I grew up in the Bay Area. I went to Cal State University, Chico. Chico State was definitely known back then as like the party school. I actually sit on the board of the university now. So trying to keep them on the right path forward and help the students figure out what's next post-graduation.
Sure.
After Chico, I landed at Bloomberg in San Francisco, which is actually like one of their smaller satellite offices, but you know, they have an amazing office there now on the pier, which is like the whole Pier 3 is made into an office. And
Sure.
I started with a bunch of Ivy Leaguers as the only kid out of a state school, and we answered the phone. So like literally, if you call Bloomberg's 1-800 number, back then you were getting anybody that had a recent job out of Bloomberg, and that's where you started. And from the phones, you move to the help desk, push the help button, answer questions, and I think that's where I figured out that I really love the markets. Right, like you get yelled at enough times by people that work at hedge funds and other places that have a terminal, you start to realize maybe you're good enough to be on the other side of that terminal. And so that's really probably what launched my career.
Let me ask you this. So what do you think has made Bloomberg so sticky? There's been, obviously we're both in fintech. There's so many Bloomberg killers out there that are trying to be Bloomberg killers, but what has made Bloomberg become so resilient for multiple decades? It's not just the Bloomberg chat, right? I mean, a lot of people buy the terminal just to chat, but what do you think their secret has been?
I mean, listen, I think the moat they have is the chat is very important, right? Mm-hmm. Like if you're in the buy side, like you're in special rooms, right? Especially the traders and everything. And then I think the news is important. Like they don't need to make money on news, but like there's something powerful about like the top news there. And like they have the read function, which tells you what everybody on Bloomberg is reading. Like I'd love for somebody to figure out how to build read for everybody that doesn't have Bloomberg, right? Like how do I know what's the most read article in the last hour by like a group of my peers? So powerful for Bloomberg. Then they obviously have thousands of functions across portfolios and watch lists. I think it's hard to displace Bloomberg because like who else does every asset class? Equity, credit, macro, FX. Like if you do treasuries or munis or you trade, CDS or interest rate swaps, if you want to value exotic options, I mean, it's really hard to go after every single piece, right?
Sure.
And so the moat is it's everything and it's sticky. But I think like with Bloomberg and like even more so with FactSet and S&P and everything, there are definitely places where you can start to chip away, right? Like we're investors in a company called Fiscal AI, like going after on the data side, like there's multi-billion-dollar businesses within FactSet, Bloomberg, and S&P, and you don't have to win the terminal. And I think in this world of AI, like who cares to go win the terminal? No, I always I wrote an article multiple times. I feel like it's the same thing. Like stop trying to kill Bloomberg and just like maybe pick off pieces that could be done better.
Yeah, no, totally fair. Where do you think the opportunities are to chip away right now? I mean, there's public markets, there's private markets. There's obviously a lot of the news data, some of it you can pull from APIs and stuff, right? But, if you were to look at like an emerging fintech that's taking over the terminal, where do you think the gaps are with Bloomberg?
Maybe I'll talk about it more just like data information services in general, because like Bloomberg's private and like they've got a separate moat maybe versus FactSet and LSEG and everybody else. We made a bet on a company called Fiscal.ai. They started as a company called FinChat. They actually were named Stratosphere, I think, early on. They were very much an early AI chat for finance, right? Sure. Where it's like before it was hot. And I think like what Braden and the team there realized was like, if you don't own the data, you're just going to be another, chatbot, right? And like I think like if you woke up today and you were building like an AI chatbot for finance or research, like we have thousands of these. And Perplexity, Claude, and ChatGPT do a good job as well. Same with Google Gemini. And so Fiscal a couple of years ago, they listened to their, the clients. I had lots of talks with them, and we looked at like if we could rebuild the data sets that these big incumbents have, but instead of having 9,000 people offshore, what if we could do it with 50 people? But AI agents, before agents were as good as they are today. And obviously like great timing, and they went all in, and now they're building, a global fundamental data API that they can deliver faster than the incumbents because they have multiple agents double checking their work. They can deliver structured KPIs. So like, what if you want to know how many Uber rides Uber did last quarter, which is a reported metric? How do you get that information within a few seconds or minutes? It's easy for the big guys to do that on like the top 50 companies, but can you do that across like the Russell 3000 within 2 minutes? And can you do that across the US, Europe, Canada and eventually Asia, and then do it with better pricing and better terms and conditions. Like, you can't buy data from FactSet and S&P and Bloomberg as a fintech and display it and allow people to download it or create derivatives. Like, there's so many restrictions and so much bureaucracy. And so Fiscal was just like, you know what? We're going to sprint. And, they won Perplexity. They won Google. Kalshi just made a huge announcement that there's going to be KPI markets, which I think is like a huge unlock for Wall Street. And it's all powered by Fiscal AI.
So when you say KPI, what are the KPIs? Like, you're betting that someone's going to hit a certain IRR or an MOI?
You're betting that DoorDash, like, if you are better at forecasting how many deliveries DoorDash is going to do, which is a reported metric.
Oh, wow. That's interesting.
Or how about this? Netflix subscribers. If you're a hedge fund investor, you're using tons of data sets to forecast subscribers for Netflix, not just US, but like, I remember when I was at, on the hedge fund side, like, we'd look at India and different parts of Asia. And we were like, if we knew how many subscribers they were going to have this quarter for this region, we were pretty bullish on, being long the stock. Yeah. So if you're doing all that already with all these different data points, like, and then think about it from the retail perspective. My good friend Chris Camillo runs dumbmoney.tv, and he's always like the social investor, right? Where he tells you, like, you can read TikTok and focus on things around you. Like, if you are better at understanding like the revenue for Lululemon, if it's going to be up or down, or how many people, how much they're getting from just the stores versus direct to consumer, that's all now a KPI market for predictions. Like, the hedge funds are spending all this money betting on the quarter, right? Getting earnings right. What if they could hedge out all the KPIs that they don't know? Or screw earnings. Guidance is going to throw you off. Trump might tweet something tomorrow and screw all the earnings and like the stock price. What if we were just like, we know that Tesla is going to beat on vehicle deliveries this quarter. Like, this is the street estimate, and we know that they're beating it. We have satellites and cameras, and we're watching all the things coming out of the actual warehouses, which all the big shops do. You can go long that. It's unbelievable opportunity for like billions of dollars of volume.
Yeah. No, I mean, there's just secondary data that you can triangulate to kind of get a signal. That's really what it is, right? Try and find some signal to either short or long some type of opportunity.
And all these hedge funds are doing it, right? Like, I ran the data teams at two of the biggest shops. Like, we spent hundreds of millions buying data to predict these things.
Yeah.
But then we had to like invest in the stock. Like, if you take that part of it out of it, now it's a direct correlation 1-to-1. Like, if how much XYZ is going to be sold at a specific, quick serve restaurant, like, there might be a KPI market for that on Kalshi now.
Sure.
If you have the market makers, like, it's like a whole new game.
Yeah. I've had a bunch of hedge fund managers come on the pod, and, we just joke about like the TV shows that are out there, right? We got Billions, we've got Industry. I don't know if you watch any of that stuff with your wife, but it's just so theatrical, right? And I mean, a lot of the people that I've spoken to, they say that it's just nothing like that when you really work there. And then I saw something in my feed, which was like the day in the life of an investment banker. And it shows the day in the life of an investment banker on like a TV sitcom versus like the real office. And the TV sitcom, there's like all this theatrics, and they're like, the market is tanking, sell, 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 sell. And there's all this theatrical music. And then, it shows the day in the life of like the actual banker at the real office. And he's like, oh, I messed up a formula on my spreadsheet. I just fixed it right now and we're good, So wanted to know from your perspective, how is it working at these large, massive, multi-billion-dollar hedge funds in real life versus, kind of the polarity from what you see on Netflix and, HBO Max?
Yeah, I mean, Billions, they did a good job. Steve Cohen and Dan Loeb worked in the same office, at one point, right? Everybody's on the west side, and they, did a lot of following both of them, like learning the mannerisms and everything. I think that like there's a lot of like, we watched Billions when I was at Third Point. Everybody did.
Yeah.
And like there's a lot of things that they get really, really done well.
Yeah.
Like obviously there's like they exaggerate things and all this stuff, but like there is a lot of points where you're just like, yep. And like you it's probably no different than like if you watch Silicon Valley and you work at Twitter, right?
Yeah.
Like when Silicon Valley came out, like
Sure.
I remember talking to my brother. He was at Twitter at the time, and
Mhm.
like Costello helped write that show. Like he was
Yeah.
like, yeah, a lot of it is exaggerated, but like it's definitely a lot of like what we go
Yeah.
through. I feel the same way.
I
I
really
think,
enjoyed the WeWork theatrical.
yeah,
Though that was the one on Apple. I forgot with the singer. What was his name? But that was really good with Anne
yeah, that was
Hathaway.
really.
Yeah, that was good.
I would say
Um,
also like WorldQuant and like the quant shops, at least when I was there, it
mhm.
feels more like a tech firm, right? Like nobody
Yeah,
cares about the market up and down. Like
sure.
you're like it's dead silent in there, everybody
Hmm.
on their keyboard, and like you're watching the market, but nobody's talking about the stocks. Whereas like if you're at
Yeah.
a hedge fund, like people are in full suit or like blue slacks, white shirt, brown shoes. Like there's executive assistants everywhere getting coffee. You've got like management of like the biggest firms in the world or politicians in the office every day,
Mhm.
right? There's like hundreds of millions of dollars of artwork on the wall.
Yeah,
Like it's a very different vibe
sure.
than, and everybody's in like their glass office versus like
Mhm.
you go to a quant firm and it feels like you're at Google.
Yeah. I feel like even if you're trying to get into finance, I just think it's really great to watch those shows because they talk about the different roles and responsibilities. So at Billions, they talk about the PMs and the analysts that are working at the PMs. I thought Industry was a really good show because they talked about private wealth management, right? That woman Yasmin that was working in PWM, and then they had they talked about sales and trading, right? So just to kind of like get a high level, even if it's a theatrical view. If you can't get in those rooms, just kind of do some research and learn about it. I
Yeah.
thought Succession was good in terms of just like how family offices work
Yeah.
and also just how the board seats are really important, right? When you're making board decisions and also they had a hostile takeover happen in one of the seasons. So again, although theatrical, there's some pieces that are tied to their diligence and the research of kind of talking to some of these people at the firm. So I thought
Yeah.
that was pretty interesting. With AI, we can't have a podcast talk without talking about AI. With the roles and responsibilities at a hedge fund, I feel AI is really still going to augment the workflows. Like I think there's going to be tools that are going to help them, come up with research much quicker. But do you think that we're going to get to a point where we don't need portfolio managers anymore or analysts? Or maybe there's, instead of 5 analysts, you only need maybe 1 or 2. Where do you think the impact is going to tie into? Maybe we start with hedge funds and then maybe private markets.
I mean, listen, I think at hedge funds, like, are we going to see more quant shops that are fully automated with one guy? I definitely think so. Like,
Hmm.
we'll see. I mean, most of the good quant shops have been using AI and generative alpha for a long time, so
For
it's just
years, yeah.
getting better and better. I feel like the things that we called things at WorldQuant are now like coming more to fruition in the world we live in, just like for the broader world. I
Yeah.
think at hedge funds, like, yeah, I think PMs maybe need less analysts now, or
Hmm.
their analyst coverage should go up a lot more. I also
Yeah.
think like as an analyst, like your free time as a long short analyst, like there's more time for in-person meetings. Like I think of it's no different from like a venture seat or like any seat, like in-person meetings and spending time with people and like getting a sense of them from an investing perspective. Like the other stuff, like Brett Coffrin from Fundamental Edge, who's like, the XPM, does a great job of like showing like how these AI tools are making people, more efficient. And like,
Hmm.
you're not going to spend 2 weeks building a pitch deck or, a month building a model. Obviously, you need to understand how they're worked and find the flaws in them and everything. But a lot of our work, like if you're not getting 3 to 10x more efficiency out of your day to day right now, you're just not leaning into these tools.
Yeah.
So, do I see a PM with like no analysts one day being successful? Definitely. Do I see like, a firm like Third Point that like, let's say it's 20 on the investment team and they go all in, a shop similar to them, and they have 5 people, right?
Hmm.
Because like they've just like gone AI native from the ground up. I do think
Yeah.
so. But you also got to remember like there's a ton of compliance and risk and just worry of like how do we do this without having like some sort of issue and
Yeah.
like getting to that point, I think we're still a
Hmm.
little far away. And getting buy-in.
Hmm.
And then I think on like wealth management, like we invest a lot there. If hedge funds are slow to adopt some of these things just because it's not easy to, like wealth is even further behind. I
Hmm.
think a lot of wealth management still sees AI as like a chatbot. And the
Yeah.
ones that are leaning into it, they're using it. But I think like wealth management doesn't spend as much money
Hmm.
in the education process. And like, like in the hedge fund world, there's like 100 hedge funds that matter maybe. And then there's the long tail. In wealth management, there's like 50,000 wealth managers. And some of the independent guys are managing like 20 billion plus. So they're not
Yeah.
small.
Sure.
And so I think there's a lot of opportunity there, but like
Mhm.
it's tough to navigate.
Yeah. And it's just like, when you get to that level, I mean, people really, when you deal with your health or if you deal with finance, right? People don't want to use a bot. Like, I mean, if you got heart surgery, you're not going to get, you're not going to go to a robot. You want to talk to a doctor in person. Same thing. If you're about to deploy 50 million, you're not going to, connect your bank account and
No, but I do want them using the best tools, right?
Yeah,
Like I would rather
exactly.
my doctor who's like 60 leverage AI to look at the image
Yeah,
and maybe
absolutely.
capture something he doesn't. No different than like I'd rather my wealth manager spend the time talking to me than like tell me it's going to take 3 weeks to like give me a financial plan.
Yeah, I know. Like, so I had a couple pretty big, large OCIOs, large multifamily offices come on, and one of the things that they do is they do account aggregation. So they'll work with you. They connect all of your accounts, right? So you got your 401ks, you got your bank accounts. Some of them don't have a digital experience. You might have to manually type that in, but that gives you kind of a high level view of like your financial well-being. But maybe beyond that, there's some recommendations. There's maybe some things that could be driving your behavior in a better way. I feel like there's other things that leave the dashboard. Like you log out of the dashboard, maybe there's continuous things that you get reminders on to kind of continue your financial well-being. And I feel like that's where AI can kind of give more of a personalized touch versus just kind of a dashboard with some graphs that you can like print, right?
Yeah.
So
I
so I
think we
feel like
all want
those.
to ask questions about like our finances, right? Or like find
Mhm.
things like tax season obviously is a nightmare. So like there's a ton of inefficiencies that like I just kind of start to think about like things that take up my own time, like
Yeah.
what AI solutions are there out there?
Mhm.
And I think like it almost feels like AI to me is becoming like streaming. Like, we all had a cable provider and now we have like Hulu, Netflix, Paramount, all these things. Like I have a AI agent as an EA executive right now that I'm paying X amount for. I'm using Granola for my notes. I'm using
Mhm.
Whisper for voice. So I'm going to have all these different things and it's all breaking out. And like maybe one day they'll roll those things up.
Mhm.
But like if I can save 15 hours a week and be doing other things with that, or just 15
Yeah.
hours back to like be with friends and family, even better,
Yeah.
right?
Sure. Yeah, no, I totally agree. What were some of the biggest learnings that you had when you were kind of pivoting from kind of the data, executive to now just kind of being a full-time investor? And what advice would you give to people that are looking to make that transition? We have a lot of people that are in our platform that are executives, corporates. They're looking to kind of pivot into the hedge fund world in VC, private equity, investment banking. So kind of changing that identity to the tech operator, the expert that's kind of the quant, to now just kind of traditional investing. What are some things that you think could help maybe in those different roles?
Yeah, I mean, I think the things for me, like I think that I guess we're just like to think about when I got here, and then I can talk about like how to get there. Is like
Mm-hmm.
first, like you got to like think about like from a venture seat, you have LPs and investors, right?
Mm-hmm.
And like, what is their ultimate goal? And like, I think one thing I realized is like, not most companies shouldn't take venture money, right? Like a seed stage venture fund needs 100x returns to like justify, like the investment. They don't
Sure.
obviously all get there, but like we need to return the fund, and so that's what it takes. So like,
Mm-hmm.
there's a lot of companies that build great businesses that do couple of $1 million and want to sell for 50 to 100 million one day. That'd be a huge exit for them. You
Sure.
shouldn't take venture money. So I think thinking about that from a scale perspective, and then also realizing that like at the end of the day, everything is a sales role, right? You're
Mm-hmm.
selling founders on taking your money, you're helping them sell it to clients, and then you're selling your LPs on giving you the money and trusting you, right? So like you never get away from being a salesperson if you truly want to like, run a fund, right? Even the
Sure.
best fund managers, right, are great showmen and salespeople, or they've
Mm-hmm.
hired like really expensive sales and marketing people around them. I think like when you want to transition to the role, like you got to start doing it before you get the job, right? Like I was at WorldQuant and I was lucky enough to tell Igor we should be investing in these companies that were giving money as like the data vendor management guy, right?
Mhm.
And he agreed. And like between him and Jeff Blomberg, we found, Steve Lau. Steve Lau joined, and like, I learned a ton from Steve and got to write, I think between the two of us, we probably did 75 investments over the few
Mhm.
years of WorldQuant Ventures. And a lot of that was like I also had to write my own checks, even if it was a
Yeah.
small amount and I didn't have money. Then I became an investor actually with Social Leverage as an LP. And then at
Sure.
third point, we had a ventures team. And Dan, when I joined there, I was like, I want to be, finding
Mhm.
deals. I was able to actually invest in a company. So like I was doing it as part of my job, but not my main focus for a long
Yeah.
time. So then when I joined Social Leverage, it was kind of natural. Like obviously Howard, Tom, and Gary, my partners, had a very good playbook on like, we're valuation conscious, we're hands-on, like all these things, and have built a great brand. But like for me, it was like obviously like coming in, knowing what I was getting myself into, and already like
Mhm.
I'd known the guys for 15 to 20
Yeah.
years. Right. I knew Howard the day he started StockTwits because WorldQuant was the first client. I
Yeah.
cold called to buy the data. So I just think like even like when I wanted to join a hedge fund, it's like how do you network into that space? Obviously, then like I got a job at WorldQuant in a very random way, but I definitely spent 2 years of my time at Bloomberg trying to figure out how to break in
Sure.
networking meeting, and Bloomberg was a great place. Like
Yeah.
they
They had
acquired,
Bloomberg Beta too. I think that's still running. So the venture arm of Bloomberg Society. I don't know if you know Morgan Politan, but
yeah,
he was at Bloomberg Beta for a while.
yeah, but Bloomberg, like from a sales perspective, I mean, like if you want to get into finance, like they
Hmm.
require anybody on the sales side to touch they do 100 touches a month, right?
Yeah.
That means like you're out on the bank at the banks walking the trading floor.
Hmm.
Like if you're the expert on the Bloomberg terminal, it's pretty easy to start to impress some people, and then somebody to be like, why don't we just hire this guy,
Yeah.
right? Or same thing at a hedge fund. So like I do think like go for go work somewhere that gives you the access to things, and kind of gives
Hmm.
me the same comment you made. Like Bloomberg teaches you all the different rules, right? What
Yeah.
is sales and trade? I didn't know the difference between sell side and buy side when I started there.
Sure. Yeah. Yeah. I mean, I was at one of their biggest competitors. And I mean, we did like a 2 week training, learning every single workflow, learning every role and responsibility. I think, a lot of times the people that end up becoming the president, they've sat in every single seat, right? They did sales. Some of these firms have like a role called consulting where you pretty much you're the dedicated support person, right? And you're kind of thinking through their roadmap. So I think that's really important too. I would also say like being an LP, if you haven't gotten into the industry, just maybe writing a small check into a fund is a great learning experience because you get all the updates, you get the K1s, you kind of learn kind of what the LPs see. And I feel like that's perfect if you do want to start your own fund because, you want to deliver that same exact professional experience that you've received, but you won't really learn that process or learn what K1s are, or what the capital account statements are if you didn't actually receive that experience. And then even if you haven't gotten to that level yet, you could do it at such a tiny scale. You could do like 10 $100 checks using Republic, right? And get into some decent deals and just show like a markup,
AngelList
right?
too, yeah.
Yeah,
You're right though.
exactly.
Like from the LP perspective, like the best funds offer you more than just the investment, right? Like I always tell people,
Hmm.
if you invest in social leverage, like we put on events, not only our
Yeah.
big annual event, but multiple
Hmm.
times a year. Like meet the other LPs, meet the founders. There's such an opportunity to like leverage the social network,
Oh
right?
yeah.
And like if you're getting that out of it,
Hmm.
like you might get more out of that network than you even do from a fund return performance. Obviously, you
Yeah.
want to like make money on the money you
Yeah.
invest,
I mean,
but like
you just think about it, right? If you pay, if you want to go to iConnections, right? I mean, you probably got to pay like $30,000 to go to the conference for one day, right? But if you do like a 50 to 100K check into a fund, what you get the annual meeting, you get all the updates. They have obviously their community. You get all the deals, you get financial upside. So I feel like it's a bigger
they probably
ROI
have
to
multiple events throughout the year when they're in your city, and
yeah,
like that money isn't upfront. I think that's what a lot of people don't
yeah,
realize, right? Like it's a capital cost structure. They
yeah,
might deploy that over 4 to 5 years.
yeah,
So then you're like,
absolutely,
it's almost like you're not putting up that money right away. Obviously, you have to be accredited or a
hmm,
qualified purchaser depending on the fund, but like
yeah.
there's opportunities to dip your toe in.
Yeah. What did you learn, as you were an LP, kind of, in that seat at Social Leverage? What were some of the things that you learned as you were sourcing, picking, and winning fund managers? And what made you kind of finally pull the trigger to make those investments?
Yeah, so Social Leverage, we did have a fund to fund that we deployed into 19 managers.
Hmm.
I think a lot of it was fund managers that we knew through our network, right?
Hmm.
Or came from people in our network that from a warm introduction. No different than how do you find the best founders, right?
Yeah.
It's inbound. Um, Having similar mindset to us just on like valuation and fund creation and how you think about you know writing your pro rata check, backing founders,
Hmm.
what to do in different situations. So like we were looking for people that had similar mindsets to us or also open to feedback, right? As an
Yeah.
emerging manager. um, Most of them were in areas that we understood or that were adjacent. So like we did crypto managers. I wouldn't
Hmm.
say we're crypto experts, but like
Yeah.
touches a lot of TradFi. So like that was helpful. Obviously some people didn't like that from an LP perspective, but I think for us, like you invest in crypto when it's down, like if you believe in like just blockchain in general, like, I think we picked some really good managers there. And then the
Sure.
other, areas, for me, it's great. Like we have, guys at Infinity who are the ex PayPal Corp dev team, like no better person to talk to than those guys if like we're doing something in fintech in and around
Hmm.
payments. Right. So
Yeah.
I think it expanded our network. And then we were looking at just like, some of the metrics around like what is the fund size. We wanted guys with like some deep domain expertise. We did less generalist funds. That's just more of our preference. We definitely had
Yeah.
a couple generalist, but just think it's harder and harder to be a generalist these days.
No, I totally agree. I mean, I think we had a couple family offices on, and they shared their experience of like deploying capital. There were families where one person got hired to build a venture program, and after looking at thousands of managers, what they learned was just the best performance came from obviously the smaller funds, because if you just look at it proportionally, right? I mean, if you 5x a $25 million fund, it's not going to be the same impact as a mega fund, right? And then the ones that they've mainly backed have been the ones that have had probably a business or an industry background in that sector. So like, someone who, one of the, I don't know if this guy was in your cohort, but Ben Parr, right? Ben Parr runs like $1 billion AI company. So he launched an AI fund, so it makes sense. You got um, all that strategic benefit from just the ecosystem that you already have, which gets you a leg up. And a lot of times these people, why are they launching it? But they launch a fund because they've just found so many hot deals, and they may not have the personal liquidity from their operating business or maybe they do and they just don't feel like it. And they're like, look, I'd rather just do this at much more scale with friends. So we're going to do we're going to do a $50 million fund one, because we have all these deals that are really hot and warehoused, and we just want to put money into them. So that's usually been the necessity that I've seen. And, from the LP's perspective, it's definitely, to your point, a specialist strategy.
Yeah. I also think like how you think about deployment in terms of like initial check versus pro
Hmm.
rata or not doing pro rata. Like I remember getting into a large debate at one of your events with a different allocator who
That
was
was in
very,
the yeah, that was in the cohort. I remember there was an allocator
and I
there, and
had
you
a
guys.
lot of the fund managers reach out to
Hmm.
me afterwards, even still to this day, being like,
Hmm.
"We appreciate you arguing because like we
Yeah.
agree with your approach." And like, listen, maybe it's not for everybody, but
Hmm.
like, I want my
Yeah.
managers like guarding and doubling down on their winners
Yeah.
versus getting diluted forever over time, and then maybe
Hmm.
getting screwed on a future pay to play or whatever happens,
Yeah.
versus like spraying all my money into
Hmm.
initial checks and then just like hoping it works out 10 years down the road.
Yeah. Yeah. So, I guess to not name any names and, protect the innocent, I guess, or whatever. But I guess the conversation was about, following on and doubling down on winners versus like first round, right? You just do one round, like first round capital, and just wait like 10 years and hopefully you 5,000x, right? So what you were saying and I think it makes sense. So you just got to make sure that you have enough capital reserve and the strategy around that. And I guess one of the questions was like, how much is enough, right? Is it 35%? Is it 50%? So catch me up on your take on that right now in terms of like how much we should reserve and how you think through, doubling down.
I mean, we do 2-to-1 for follow on. So, $100 million fund will write 21 to $2 million checks, right? And then the rest is for follow on.
Are you leading in those or just
leading
co-invest?
only, 90% leading or co-leading, 10% minimum ownership, sometimes as high as 25%, depending on how early we are. And then like we'll invest through the Series B, and like obviously we have definitely like rules in our agreements on we can't be more than X percentage of the total fund.
Yeah.
But like if I look at some of our biggest winners, like it's great to own 10 to 15%, and we're like in the Series B, right?
Yeah.
And like that's how we really think the fun winners. And I think like we can go back and show being early in Robinhood and a couple other companies, like with my partners Tom and Howard, and showing that like we didn't have money left, and then like we did an SPV and not everybody wanted to dive in because there wasn't the conviction that we had as fund managers, and giving up our pro rata to somebody else, and they make an unbelievable return because Robinhood had $1 billion, nobody wanted to put more money in, right?
Sure.
And who knows the company's better than the seed managers if we're on the board and talking to the founders. In some cases I'm talking to the founders every day.
Yeah.
And text messages, right? Like on a deal by deal like client basis. Like I think this morning have already talked to 6 of our founders, and it's 10:30 in the morning on the West Coast, just on like different deals they had in their pipeline or an introduction.
So I had Rex Salisbury on the pod. He's got a really great fintech community, and his take is like, look, I only do pre-seed because I mean it's just so competitive now. You may not even get in at the seed with some of these hot deals, but if you can get in at the pre-seed, it's a bigger risk to not get in at the pre-seed and try to get boxed out at the seed or the A and then just never get in. So I think there's a unique edge if you can be a pre-seed manager, obviously if you have those networks and that intel to be able to get in. So do you get in at the pre-seed or mainly at the seed to Series A?
I mean, I don't know what the terms are anymore in terms of like, I think we kind of look at it from a valuation perspective. Like, is it seed? Is it pre? Like if you sit in San Francisco and New York, I think the seed rounds are looking more like A rounds now.
Yeah. I mean, pre-seed right now. I mean, catch me up on the market. So what do you think? What do you think is when you're bounded by the valuation, what's kind of a valuation that you would characterize as a pre-seed to seed to Series A?
Listen, we love to get in, and our focus is sub 10 million post.
Okay. Yeah.
So we'll write a $1 to $2 million check, 2 on 8 post, 1 on 5, right? Like that's probably pre-seed in most people's mind, but we want to see a product and like a client or two. So in some cases, people would be like, I have a product already and a client, like, I'm much further along than that. I think it depends on the industry they're focused on.
Yeah. So when you say one client, they're probably sub 500K in revenue pretty early.
Like I've had founders with like close to $1 million in revenue, and we still did it at like 9 or 10 posts.
Sure.
They didn't raise money yet. They see the value of social leverage. They know that like, we bring a lot of like experience to really help them.
Yeah.
I think a good Series A now, like you're probably doing 3 to 5 million in revenue, and then you're going to raise 8 to 20 million, right? I mean, the numbers are extravagant if you're depending on what industry you're in, obviously, and how hot the demand is. We still kind of push with our founders. It's like, listen, like you need to be cap table conscious, and you need to also be conscious of how much money you're raising and the valuation, because like, it's great to get this huge valuation, but like, what's your ultimate goal? Like not every company we're investing in do we think it's going to be a multi-billion-dollar outcome. So like if you go raise money at $1 billion, your investor probably is expecting somewhere between a 4 and 10x outcome, right?
Oh yeah.
So like if you're not as a founder aligned with that, like why did you raise at $1 billion with like and have to grow into that valuation? I'd rather you like raise at something that's like relatively fair. Maybe you got to grow into it a little bit. But if you have to grow into it massively, like you're putting so much pressure on yourself. Like obviously there's some industries and verticals where like you've got to raise a ton of money and you got to go for it because like there's competition and you need the money. There's a lot of others where it's like you need the money to do what you're doing, but you have a moat in and of itself right now. So it's like
Sure.
execute and like find the right investors,
Yeah.
right? What are
No,
they
I
going to
totally
really?
agree.
And like, it's not even like the right investor. Sometimes it's also the
Mhm.
right partner at that place.
Yeah.
Are they going to be around? Like, if you think about like the biggest shops in the world, like those partners might not be there in 4 years.
Sure.
Right?
I had a guy that came on the pod. It was really interesting. So this is the first time I saw this. He has a practice, I think it's called 2 Meter Capital. What he does is essentially, look, Matt, at some point you're going to be like 60 years old and you may not want to run social leverage anymore. You may not want to do anything anymore. So but there's still LPs and there's still like, there's still like 6 years left with like your, 20th fund. So what do you do? Right. So like what this firm does, this is the first time I've seen this, they kind of will come in and they'll just GP the fund. They'll just take it over. And then what do? You got to give investor updates. You got to give K1s. So I thought that's an interesting niche in the market. It's kind of like, I'm trying.
Secondary GPs.
It's essentially like, the funniest comparison is like, these mom and pop shops that don't want to run their laundromat anymore. It's essentially that for VC. It's like, look, I'm a baby boomer now. I mean, whatever
It's the
we're
wealth
going to call
transfer,
ourselves.
right? It's the wealth
Yeah,
transfer for the venture world. Yeah, I mean, it
exactly. So
makes
you
sense.
kind of come in and you operate that fund. I've never seen that before, but like that's kind of, so I think there's going to be newer kind of bridges where people like, you're a mom and pop private equity fund owner, you're on your fifth fund and you got sick or you just don't want to do this anymore. You don't want to be in the game anymore, but there's someone that's young and hungry that comes out of Harvard or they come out of some accelerator and they're like, look, I would love to acquire the GP stake of this firm and just operate this for the next 2-3 years. What better learning are you going to get? Doing that. Let's say you spend $250K doing that instead of going to B school. You bought into the stakes and you're running it. And then you go out and then you build your own franchise for the next 50 years, So I thought that was pretty
Makes
interesting.
sense. I mean, listen, I think like for us it's a 10-year fund and there's definitely like extensions, but like the
Yeah.
best companies like what Robinhood took 9 years to go public, eToro took 13, like
Mm-hmm.
a lot of other companies even if they go through M&A take a long time. So like
Yeah.
we still have companies in our fund 1 and 2 that are alive that like will return money. And we definitely have to like figure out ways to get out, right? Or like monetize because we're at end of fund life.
Yeah, because even if you do the secondary, it may not be that massive of an outsized return yet versus just holding for maybe another 5-6 years, right?
Right.
So
Yeah, so you got to figure that out. Well, there's a continuation funds and there's other things done there.
Absolutely. So what are, we're wrapping up. I mean, we essentially wrapped up Q1, right? So what are some of the really cool, exciting things that you've seen? And what are some of the learnings kind of reflecting on Q1 2026?
I mean, listen, I think like AI is like exhilarating, relentless, and like tiring at the same time. Like I think I was in a conversation the other day and somebody was like, "Oh, did you see XYZ?" And somebody's like, "Of course, that happened like over a week ago." And like that's how quick AI is moving.
Sure.
And so I think it's exciting, but it's definitely like I can see the craziness of like, founders are now working, 9 a.m. to 9 p.m. 6 days a week, right? Like a different level of commitment. I mean, we're excited. There's tons of great companies, tons of opportunity. Obviously, lots of risks now with like waking up and Claude, going after what you're building. But like, that's always a risk that like an incumbent comes in. I think it's just happening a lot quicker now from the AI LLMs. But we're probably 7 companies in, soon to be 8 in our fund 5. So we're pretty active.
Well, to kind of use data analytics talk, screening, right? So like, how do you source and screen some of these deals with all the noise and all the hot hype? I mean, what I heard a manager that came back from SF. She's based in Boston, right? I think she's part of a large construction conglomerate and they have a venture arm. But she was like, look, I went to SF and like, I just felt these crazy AI vibes. That was just kind of the whole buzz. So with just all that hype and buzz with AI, like how are you kind of refining your screen? Because you can't deploy into everything, right? So there's only a select amount of slots in your portfolio construction. So how do you really thoughtfully, not get kind of caught up?
I mean, 99% of the deals we do are inbound. I mean, I think thankfully we've been around 17 years, and
Yeah.
each one of us as partners have like pretty deep networks.
Sure.
Like, as we're sitting here, I think I've seen 3 founders that I have send me new deals of people they know, which are usually the best.
Yeah.
But we also have very active LPs. So like, I'm not, for as much as I have this data background, I'm not like deploying AI agents onto LinkedIn to find stealth companies, and I'm not going to a happy hour on a Wednesday to hopefully meet some kid that's, starting something. I think like that's a different game. And I think like you got to do that when you're young. Like, when I was at WorldQuant, we went to every conference in the world, right?
Yeah.
I might have been at like 3 conferences a week around, like in different countries. I do think it's helpful to build those networks, but I think like the best funds have their own unique deal flow and aren't chasing things. And so, if I think about all the deals we've done in this fund so far, it's been our LPs, our founders. We definitely have like, other managers that we're close with that like they do stuff after us or before us. And like, so we share things like, I do a ton of stuff with Portage. They're not usually doing as early as we are. They'll send things to me. I'll call them when I do a fintech deal, and they'll be like, as soon as it gets to the these metrics, we love this space. So
yeah,
I think like a lot of the job is like keeping strong networks, and like I think it goes back to the in person, right? Like I can live in San Diego, but I go to New York, I go to San Francisco, I'm in Toronto. We do a bunch in Toronto. Like see people, talk about, share what we're interested in. Howard writes a lot. I write a lot. So I think that's important.
I totally agree. I mean, look, we run an education company, helping people pivot into Wall Street, essentially, right? And if you really think about it, like if you want to learn DCF, you want to learn LBOs, a lot of that is on YouTube. But the value is like, hey, let's meet. Matt's in town, Steven's in town. Let's get a bunch of buddies together. Let's hang out. You can't really AI that out of obsolescence, right? It's just the relationships, are kind of what really is just impossible to differentiate. Now you can optimize your relationships. Maybe you have an inbox that kind of recommends the top prioritized emails that you should respond to, or maybe your CRM. It's like, hey, this LP, just reached out to you, and you should reach out to them in the next 2-3 minutes. That's the hot person to respond to. You can have these tools to augment it, but people remember that long-term relationship. I mean, from 5 years ago, it's like they remember that memory of like hanging out with you and having that good experience, right? And I think that's really where the in-person comes in. Let's talk like just kind of future stuff, right? Like, I mean, what do you think is going to change kind of humanity, right? I mean, obviously we already know about robo taxis. We know about potentially, fixing your spine using Neuralink, but what's kind of some next level stuff that you've been hearing about or excited about?
I'm excited about space. I think everybody is. I think humanoids are coming. Like, personal investor in Aptronic, and so I got to like see the humanoids in the facilities, them building them. Like, my buddy always talks about what's the world look like if you have infinite labor. So I do think humanoids are coming. So I think AI. I mean, between us having robo taxis and humanoids and being able to go to space and like, do we get more of these like tunnels from Elon so I can get from LA to San Francisco in 2 hours, or like other ways? Like I'm curious, like in 20-30 years, like how can I get from San Diego to London in like 2 hours? There's got to be like travel's got to change, I imagine. But like, I love traveling. I love going to Asia. Like if I could get there, I could do a weekend in Thailand by living in San Diego.
Yeah.
Like that's like, I think like the huge unlock, right?
Yeah.
Like, those.
I mean, it's interesting. So, Naval mentioned something about this, like I think years ago, and he's like, there'll be some point where humans are just, like a lot of the labor is taken over by maybe automation, by robotics. I mean, so, a lot of times people go to London. Why? Because they have to work. They have to do this project, or they have to see a client, right? But if you don't have to see the client because the goal of servicing that client is already automated, then maybe you just go to London to, humans are meant to actually enjoy life, right? And actually go to London to see the sights and see their family.
Relationships, right? Also, but like, listen, like I'd rather have lunch with you in person than do a Zoom catch up in a month.
Yeah.
What if I can like wake up at 6 a.m. my time and be in New York in 2 hours and
Yeah.
not have to get and cut out all the transportation to the airport somehow? Like, I don't know like how we're gonna, but if we truly believe like the world is changing and anything is possible, like can we build tunnels that have cars that drive at 10,000 miles an hour across the country? I don't know,
Yeah.
right? We're getting really crazy on what's possible.
Yeah, I mean, I think instead of investing in multifamily, you just buy a fleet of like 50 robotaxis, right? And it's the same amount of money. And the Uber drivers are going to have to skill up and learn something else, right? I mean, so I think that's
Yeah. I mean,
kind of
my
the
brother
difference.
works at Zipline, which is like the drone delivery company. So like
Hmm.
you get rid of like, Uber Eats and DoorDash because like these drones can fly your food and just drop a
Yeah,
zip line down to your house and drop off the burrito. What does that cost?
yeah,
10 cents for the delivery? I don't have to
sure.
tip that drone either. And
Yeah.
then like, the crazy cost that we have of like $50 to get a burrito delivered to your house now just went
Hmm.
back down to like $10 and a dollar
Yeah.
for one.
And people, the safety thing, I mean, people are already using Waymo and SF, right? I saw one Waymo in
Yeah.
New York that was driven by a human. So I think they're coming to New York at some point. But there's going to be a point where people will take the risk if the price is right, right? Instead of paying for you open up the app and you're like, hey, if Uber's $30 to get from like Midtown to FiDi, where it's 12 using Waymo, and hey, it's not a human, but like I'll
The
take the chance.
Waymo
I mean,
experience is amazing. I did it in San
yeah,
Francisco. It's
I didn't get a
just
chance to do it yet. I've seen them
it
around.
takes twice as long because like
Okay,
they don't cut corners, they don't
yeah,
speed. So you got to have like you got to get somewhere in 20 minutes and Uber says I can get there in 12 and Waymo says
yeah,
30. Waymo
yeah.
probably takes 30.
Yeah, sure. Yeah. No, that's great. I know we're about 3 minutes left. I mean, I really appreciate this. I mean, this was amazing. Just give me one piece of wisdom, man. I mean, it could be from a mentor, it could be from a family member, could be just from your life as you've lived so far up to today. But what piece of advice you got for us?
I mean, listen, I think the advice if it's like, especially for people trying to go after the careers, like move to where you need to be. You got
Hmm.
to go for it. And remember living in San Francisco, and every mentor I had said, if you want to work in a hedge fund or venture or do it, you got to go to New York. You got to move to Hong
Yeah.
Kong. Go get the experience. I grew up in the Bay Area, but like outside the city. So like I think you
Hmm.
have to like move. And I think the more that the world is getting back to in person and AI takes care of all the headaches we have, and we have to be in
Yeah.
person. I think you got to like get on a plane or just take a few years to go uproot your life and live somewhere else.
Yeah. Yeah. And sometimes, there's an edge to go to the less sexy places. We had a student that was in our program that landed a role at Stepstone. And like Stepstone, I think their office is kind of like in the boonies, like outside of DC. But look, you're at like a massive, multi mega institutional LP. You go there, work there for 1 or 2 years,
Yeah,
and then you go to New York.
move to the right firm. Exactly.
Yeah,
Yeah.
exactly.
Yeah.
Awesome. Well, hey Matt, thank you so much. Really good catching up. And
Yeah, I appreciate it.
I'll
It was
see I'll
fun.
see you when you come out to New York.
Obviously.
All right, man. Take care. Bye.
Thanks.